What is going on, traders? Welcome back to the Traveling Trader. Hope you guys are doing well. In this video, we will be discussing my top 7 stocks to buy before Thanksgiving. Now, Thanksgiving isn't really relevant to the market besides the day after Thanksgiving, which is Black Friday, and we tend to see some great numbers, but that's not really the reason why I'm saying this. I'm just trying to put a timestamp on the video because somebody's going to be watching this in January and February and saying, hey, are these plays still valid? So I just want to give the video a little bit of context. But we have been seeing some market volatility this week after the election, which is expected because we've had such a great rally during the week of the election, which was unexpected. But we still bought the dip before the election, even though everybody was saying that we would get some volatility. But before I jump into it, if this is the first time on the channel, I just want to say welcome to the best trading channel on YouTube. Happy to have you here. This is the channel where we talk about options trades, stocks, short-term plays, how to day trade, swing trades, long-term portfolios, technical analysis, fundamental analysis. We really run the entire spectrum. And if you want access to all of my trades, link is in the description below. We have a group of over 1,000 traders discussing strategies, entries, exits, their own plays, my plays. You get access to my portfolio. It is really a vibrant community, and I'm very lucky to be able to run it. All right, let us get right into it. So as I said, the market has been experiencing a little bit of volatility post the election. So if we take a look, here is the NASDAQ. You can see that the NASDAQ formed a double top, almost really a triple top, testing the 100-day moving average, which is something that we haven't done since the lows of the pandemic. S&P 500, same thing. We had this double top pattern. It is trading within this channel here, but like I said, we are seeing some volatility here in the short term, but there's definitely some sort of sector rotation in the short term going on. As you can see, AMC gained 50% yesterday. ACB gained 14% yesterday, up 41% from Friday. These are all overreactions due to a couple of key points or a couple of key stories. One, obviously the election being the overarching one. So a Biden win is seen as more receptive to cannabis stocks, EVs, etc. But also we had a bit of a sector rotation with entertainment, restaurants, etc., seeing a big jump yesterday and today due to positive news about a vaccine. Now, unless you were hiding under a rock, you probably heard about this. However, I'm going to tell you today about overreactions in the market, and we are seeing this already. The important thing about the vaccine is this. Yes, scientists have seen a 90% effectiveness with Pfizer's vaccine. However, the results were not conclusive and they were not peer-reviewed. As you could see in this New York Times story, the data released by Pfizer Monday was delivered in a news release, not a peer-reviewed medical journal. It is not conclusive evidence that the vaccine is safe and effective, and the initial finding of more than 90% efficacy could change as the trial goes on. This is very important, not only for the obvious health reasons. Obviously, we want an effective vaccine out there as soon as possible, but as it relates to the market. The market loves to overreact. So what happened as a result of this? Well, like I said, we got, restaurant companies like Cheesecake Factory, which is basically still closed almost nationwide, jumped up yesterday by 20%, up another 2% today. AMC, like I said yesterday, was up 50%, and movie theaters aren't even really open yet. And then you have these stay-at-home stocks like Zoom retesting the 100 moving average. Clorox tanked to hell, basically. You have DocuSign, which fell to its 5-month support, and tech stocks, which make up a lot of the NASDAQ, right? These are the only stocks that can actually justify their earnings at this point. They've also dropped, and like I said, NASDAQ has tested the 100-day moving average. It looks like it's heading there again. So as traders, what do we want to do? Well, we want to take advantage of these overreactions, right? We know that they're overreactions. We can see the writing on the wall. So we want to take advantage of that. What does that mean? Well, that means buying the dip on these plays that are still, in my view, very relevant. Are people going to stop using Zoom from now until December? Are people going to stop using Clorox from now until December? And I'm just assuming December as the date of a vaccine, but it could very well be mid-2021 before we have an approved vaccine. So we want to take advantage of these overreactions on stocks that, in my view, are still very much in play. DocuSign is another one that's at a 5-month support. So I guess no better time than now to start the video. Now, I don't want to discount the possibility of a sector rotation. So there will still be some stocks in these top 7 that I'm talking about that could apply if the sectors are truly about to rotate and we're going to start seeing some long-term money coming into these plays and not just traders trying to play the short-term bounces on these overreactions. So let's start with stock number 1, DocuSign. DocuSign right now is at a 4-month support. And if you bought at any point at this 4-month support, you profited very nicely on a number of these bounces. Now, DocuSign's earnings are also coming up in December, and they are expecting positive earnings, meaning they're expecting to actually net a profit, which they did actually on these on the previous earnings when they were expected to report a loss. So based on the technicals, I'm buying DocuSign here. If we take a look at some of its fundamentals, I mean, it gets an A+ rating for growth on Seeking Alpha, and almost every metric is in the A or A+ sector. In terms of growth, if we look at its revenue growth year on year, you see that it's almost, just a upward trajectory, a straight upward trajectory with no troughs. And the last 2 quarters, we actually crossed the $1 billion mark for revenue. I should also note that ARK bought a lot of DocuSign yesterday. And if you know anything about me in this channel, you know that I like to follow the smart money. And we are actually getting it for a lot better price than they did as DocuSign dropped a little bit today. Remember, guys, buy the dips, follow the smart money, and you will be okay in this market. FOMOing is what will kill your portfolio. All right, stock number 2, where there was also a massive overreaction. QDEL fell to the 200-day moving average. I already bought the stock at the 200 MA, but you could still, we can expect it to see some support here, just like we did back when it fell in August. And I believe it fell at this point partly because of positive vaccine news as well. So we could see that it found, about 2 to 3 weeks of support here. So I'm comfortable buying QDEL on this crash. And for those that don't know, QDEL is actually a manufacturer of diagnostic healthcare products, but it is specifically tied to COVID in the sense that they had the first emergency use authorization for a COVID-19 antigen test. As I said, it could be months before we have a vaccine. It could really be summer 2021. Who knows? Either way, I don't think that QDEL has lost all of its value in the short term, effectively losing, about 40% of its market cap in the short term. I don't buy that story. This to me seems like an overreaction. So I want to definitely try to capitalize on this overreaction. Again, let's take a look at Seeking Alpha to see some of its fundamentals. And you could see that this one also gets an A+ grade on Seeking Alpha. All right, stock number 3 is Nintendo. Nintendo is now sitting at the 100-day moving average for the first time since March, since the worst of the pandemic. And Nintendo is kind of a hybrid play. It's not really a stay-at-home play, although it could be, but it is also a holiday retail spending play. As we see high growth usually around the holidays for video game companies. If you take a look at the last time that Nintendo significantly grew before the pandemic, it was between October and December of last year. And during this time, Nintendo actually gained 27%. So now that we are sitting at the 100-day moving average, I'm very happy to buy the dips on Nintendo. Don't really need to go into the financials. We already know that it is a profitable company that routinely beats out earnings. So Nintendo is stock number 3. And it is also worth noting that ARK did, as a matter of fact, buy Nintendo as well, but we did get a slightly better price than them as we waited until today, and we actually hit the 100-day moving average. Stock number 4 is Big Lots. This is another hybrid play. So I'm trying not to stick too much to the work from home, stay at home plays, and I'm trying not to buy too much into the sector rotation, but trying to find a nice variety of plays for us to buy the dips on. And Big Lots definitely is a hybrid play because it is one of the retailers that was open for most of the pandemic. And as a lot of the population were suffering financially, they definitely find value in discounted items at places like Big Lots or Walmart, etc. So Big Lots here at the 100-day moving average again for the first time since April. And if we take a look at Seeking Alpha, you see that Big Lots has a growth grade of B+, but probably even more important, it has a profitability grade of A+. And its net income margin, TTM, is 480% better than the peers in its group. So definitely happy to buy Big Lots here on the dip. This isn't going to be like a huge money maker, but it's just a solid stock to own. All right, stock number 5, no surprises here, Zoom. Zoom finding support at the 100-day moving average, a level that it hasn't been to since January. It routinely was finding support at the 50-day moving average on this insane run-up, but this stock was $600 almost not that long ago, and we are now trading at $380 at the time of this recording, sitting at the 50-day moving average, or at the 100-day moving average. And like I said, I think that the vaccine news was an overreaction. We might not even be that close to a vaccine. So the fact that it tanked because the market is now expecting everyone to flood their offices and be in in-person meetings, I mean, that's garbage. I don't think that that's going to be the case, not for a while. So I'm happy to buy Zoom here at a discount. Guys, there is a theme here if you haven't paid attention to already. I don't like to buy stocks at the high. If I see NIO at $44, it's not going to make me jump in. If I see Tesla at $500, I'm not going to jump in. I like to buy when everybody is selling, because when you take a look at something like this, right, everybody is panic selling and or taking profits, but everyone is panic selling, and you know, the stock basically fell to the 100-day moving average. Well, who's buying here? Those of us who want to ride the next rally up. You have to try and fade the market. You want to be buying the dips and selling into the rallies instead of the other way around. You don't want to buy NIO at $45 and then NIO starts tanking to, you know, $35 and you give up your shares. Who are you giving up your shares to? You're giving up the shares to an overzealous dip buyer who's happy to buy these dips, just like some of our good friends here and here. All right, stock number 6 on this massive overreaction play is Clorox. I'm buying Clorox here. It dipped even below the 200-day moving average. Clorox is an insanely profitable company with a high profit margin on their products. Now, here's the thing with Clorox in terms of my view from a fundamental standpoint. Even if we do get a vaccine, I think that this pandemic has changed the world forever. I think that people will still feel iffy about hygiene and will take their hygiene more seriously now. We're not going to stop seeing hand sanitizers everywhere. We're not going to stop seeing disinfectants everywhere. I think this is here to stay, even after we have a vaccine and hopefully this pandemic is done with. So when we take a look at Clorox and see that it is, oh, there's a lot of sun in my face. One second. So when we take a look at Clorox and see that it is in fact dropped, you know, almost 20% since the highs. Again, happy to buy the dips on Clorox here. All right, and the last stock number 7 that I like here, like I said, I was mixing things up, guys. Obviously, these aren't the only 7 holdings in my portfolio. You've seen my previous videos, but the last stock I like here is DKS, Dick's Sporting Goods. It is just near overbought on the RSI. Again, at the 100-day moving average, earnings are coming up. The last 2 earnings that it had, it ran up monstrously since then. Pays out a nice dividend. It has a 5-year dividend growth rate of 17%. It has a very respectable profitability rating and a very respectable growth rating as well. Now, I might not hold DKS for the very long term. I just want to write it up probably until after earnings, maybe through the holidays, and see if we can get to that $63, $64 range. Anyway, traders, that is it for this video. If you want access to the trade alerts where I send out all of my trades, link is in the description below. We had a massive overnight trade of 62% on Ring. We made a nice 25% options trade on Zoom. We bought the dip on Beyond at around 110 and rode that up for 10% overnight. Just tons of plays. And obviously, I know a lot of you guys are super fans of NIO and Tesla and all the EV plays. And trust me, there's a significant number of alerts in that sector, especially today. And there's no better time than today to sign up if you want access to our wonderful trading group. So link is in the description. Subscribe to the channel, hit that notification bell. Let me know in the comment section which of these you already have or which you are interested in buying. If you have any questions, leave that in the comment section as well. Stay safe out there, traders. Peace.